One, two, three. One, two, three. Hello, hello, traders. Um, let's see. I actually can't see my screen. I don't know why. Okay, yeah, I can see my screen. So, hello, traders. Welcome to today's Daily Edge, and today's we're going to talk about again the pound, and we're going to talk about how the pound has appreciated against all majors. We're going to talk about the U.S. dollar crashing. We're going to talk about uh, crude oil, silver crashing, and the gold. But let's start with. Why don't we start with? Um, yeah, why don't we start with the pound, okay? And why don't we give everybody a few minutes so they can join us? Um, because right now we do have a couple of viewers, but I will give everybody a little bit of time so they can join us. So let's talk about something else, shall we? In the meantime, I've added a webcam so you guys can see me that I'm actually a real person and not that I'm actually a real person. You know, um, delivering this daily edge. And right now I'm inviting all of our subscribers. Yep, all of our subscribers to the today's daily edge because I do think that it's important because this is the first daily edge, well, the last daily edge before Friday in my news terminal and my charts, and we're going to actually see live the news release and yeah, we're going. It's going to be a lot of fun. I'm going to start the daily show tomorrow, like 30 minutes before NFPs. I'll keep you guys posted. But definitely will be an interesting to watch, and maybe we can do some live trading, live news trading, and I don't know if you guys are up to the challenge. I know that news trading is not for everybody, but even if the news trading is not for you, definitely try to join tomorrow because not only am I going to be looking at the live NFPs release and the live unemployment employment numbers from Canada release, but we will also be looking at some historic news. No, not historic news. I'm sorry. Some historic data about employment in the United States, and we're going to compare it with the historic price of gold, with some other data. It's going to be very interesting tomorrow. But today, the main focus is Brexit, guys. The main focus is Brexit, and let me just finish inviting everybody to today's Daily Edge. It's going to be awesome. Yeah, and I'm sending that email right now. Okay, so we are live, and yeah, let's start with the news terminal, shall we? Again, if you guys have any questions, just type the questions on the chat. Yeah, we'll be more than happy to respond any of your questions. If you want me to look at some other instruments from other markets that I'm not looking at, if I am up to the challenge, I am going to be looking at it. Just full disclosure, I don't trade agriculturals. So if you guys want me to look at coffee, corn, etc., I am not the person for that. But any other market, any currency market, I am your guy. Gold, I am definitely your guy. Silver, the crude oil, and some equities. All right. So today we had some data coming out of the United States. We had the ISM non-manufacturing PMI for August, with an actual number beating the previous numbers and beating estimates. It came out at 56.4 versus 53.7, with an estimate of 54. The U.S. durable goods orders month over month, an actual of 2%, with a previous of 2.1% and an estimate of 2.1%. And the U.S. factory orders month over month, beating estimates and previous numbers. Again, let's see some Brexit news, and this is another important number out of the United States. We had the U.S. continuing jobless claims, an actual of 1,662. I'm sorry, 1,662,000, with a previous number of 1,692K. Well, that's a 1,698,000. I'm sorry, and an estimate of 1,685,000. So numbers being estimates on continuing jobless claims, and U.S. non-farm productivity quarter over quarter for the second quarter of this year of 2.3% versus 2.3% and an estimate of 2.2%. So a little bit of mixed numbers right there. Let's have a look at what happened. Some Brexit news, but before that, what happened? What happened yesterday is that MPs, or the opposition, passed a motion to block Prime Minister Boris Johnson hard Brexit. Okay, if you remember correctly, Prime Minister Johnson had it had been, I mean, it was his rhetoric to pull out the UK out of the EU by October the 31st, no matter what, no matter the circumstances, and if there was or there was not a deal on the table. And that was pushing the pound down, because if the UK pulled out of the EU, Woody, I'm going to go through your goal question in a little bit. So if the UK pull out of the EU without a deal, that was going to be disastrous for the UK economy and for the pound, of course. And that was, I mean, that political environment was what was driving the pound down. You know, that uncertainty about a soft Brexit, okay, a Brexit, an exit of the UK out of the EU with a deal in place. You know, that uncertainty now is gone, because the opposition has now blocked Prime Minister Johnson from pulling out the UK out of the EU without a deal. So if a deal is not in place, the UK will not leave the EU, apparently. And that, my friends, is a complete turnaround in the political environment of the UK. Okay, so right now everything is looking good, because the concerns of a hard Brexit are now gone. No, well, they're not quite gone, but they're minimal. Okay, so what happened here is, let's have a look at the pound, shall we? Let's grab a tool so we can see from low to high yesterday. From low to high, that move was about 3.3%, or 395 pips, okay, from low to high. And if you remember correctly, yesterday we were looking at this breakout of or the pound trading below the 120 level, a very important level in the pound, and we were looking, and because we didn't know about, well, this was on Tuesday, I think, actually, because we were looking, and what I was saying is that we were looking at this level right here, and at this level right here, for an opportunity to go short on the pound. This was before we heard the news about the MPs blocking Prime Minister Johnson from pulling out the UK out of the EU without a deal. Now now that that is in place, what we can expect is a complete turnaround on the pound versus all majors. And again, here on the pound versus the US dollar, very interesting price action because we have broken right now with a long-term bearish structure. Okay, now our first targets to the, well, not our first targets, but our nearest targets to the upside is I'm sorry, the this level right here, this previous low at the 124 level. Okay, so for the time being we are flat the pound, but we are going to be well, definitely we are going to be looking for pullbacks to jump in long on the pound, okay, because of the newly changed political environment in the UK, and now with that blockage of a hard Brexit or a no-deal Brexit in place. So first level that we are going to be looking at is this size right here. Let me just grab the correct tool to point it out. Okay, now let's change it white because this is the level that I want to pop to my eyes right when it hits. So basically, what I'm looking at. Let's go to the hourly chart, shall we? What I want, or what I'm looking at, is a possible retest of this level, the broken level, the 123 level, or these highs right here, as a support for me to jump in right long. Okay, for the time being, we are still trading above that 123 level, but we are going to be looking for that to jump in long. Again, this is just some momentum to the upside, but yeah, that's my complete level on the pound versus the US dollar. Again, this might happen today, this might not happen today, but if you want notification of my trading levels whenever this happens, I urge you to join our premium community for just $25 on the first month. I'll leave you a link. I have left you a link below this video, so you can test us out. Okay. Now, and if you want to get notified every time I go live, just remember to join our community via YouTube, and just follow this channel and click on the notification bell. All right, so let's move on from from the pound. Well, actually, we're going to look at very interesting price action on the pound versus the yen now. The pound versus the yen, if we go to the 4-hour chart, I'm going to show you first what I have going on here. This is the 4-hour chart of the pound versus the yen, and this is very interesting because we have a very long-term bearish structure that we have just broken with again. The 126.50 level was our historic important level. This lows right here. Remember that on my chart, whenever you see a red level, a red thick level like this, like the one on the bottom, the one on the 126, the 126.50, this means that this is a very important historic level right here. Okay, so basically what I'm looking at, or what I was looking at, is this retest of the of the bearish structure and these lows. Okay, and basically I was looking at this because what I wanted, what I wanted is for a pullback to happen, for a retest of the 130.50 level, for an opportunity to buy the pound versus the yen. But again, the pound is just too strong and it continues to move up, and we continue to wait for that pullback to happen in order for us to jump in long. Okay, for the time being, we remain flat against we remain flat on the pound, and that move, that move on the pound leads, brings me to, gold is super crashing right now. Oh my God, gold is crashing. Just have a look at this gold chart. Gold has broken with this long-term bullish structure. And now I'm looking at the 1495 level. Yeah, let's continue with gold. I'm looking at this level right here, the 1495. And I'm definitely not sure if I'm going to be a buyer in gold. But this, just take a look at how important, understanding bullish targets is. Again, yesterday and the day before, the entire week, have been looking at this 161.8 percent retracement of this move. All right, we retraced 161.8 right here, and the 161.8 retracement of the previous move is an important target, with in this case bullish target. But if we were short, looking at the short opportunities, this would be on the other side, but it would still be a 161.8. Okay, so again, tested once here, tested again here, and of course the last one. And now gold is crashing, and what we're going to be doing basically is looking for short opportunities. So our level will be the 1523 or this previous base. This is what I have to say about gold. I'm not on that. Well, I'm still long from 1277, and I do have my stops below a level that I think that invalidates my long-term idea. But short term, maybe looking for shorts around on a pullback. Okay, that should be what we will be looking for. Okay, so let's move on. The euro. Let's look at the US dollar again, shall we? Because dollar is gold. Dollar is king. I'm sorry. When trading currencies. So again, that 161.8 makes its appearance. Very important level, guys. The 161.8. That's the 161.8 of this move to the downside. Okay, so basically what we did is we moved down to these lows and we retraced 161.8. That's some very, again, bullish targets from buyers around the 97.20 level. Okay, so basically what we did is, buyers gave up, took profits, sellers jumped in, and the US dollar currency crashed from the highs at around the 99.40 level to the lows to test again previous base around the 128%. The previous base that we're testing is the 98.10. Again, we figured that, or we knew that, not what we knew, we expected. That's the correct word, because no one knows what's going to happen. You're welcome, Booty. We expected buyers to jump in here at this level. If we throw on a Fibonacci retracement level, that should be around the 50, I think. No, that's the 60, around the 61.8. Yeah, around the 61.8, 50 Fibonacci retracement. Yeah, it's much closer to the 61.8. Which is a big level, big Fibonacci level. And again, if we want to calculate, if we, I bet you that the 161.8 is around the 99.80 level. Okay, so basically, let's calculate again. Oops, I'm sorry. Let's calculate again some targets to the upside. No, that's not going to be the 161.8. More likely the 127, the 123.6. Let's have a look. Obviously, it's not going to be this one. Again, it's an extension of this move. Let's see. Okay, so basically, what we're trying to do is we're trying to look for targets to the upside, guys. That's what we need to do. We need to look for targets to the upside, and the 161.8% retracement of the last move down let's put it on white so we can actually see it on our charts, is around the 100.20 level. Okay, so basically, what I'm saying is that, for example, from this move down, we traced 161.8, then we pulled back, found buyers at the 61.8, and we should be on our way to the 161.8 of the last move down again. I mean, this is called just a very simple, well, Fibonacci sequence, not sequence, but wave pattern. And yeah, I mean, we definitely are looking at buys on the US dollar. But remember that we have non-farm payrolls tomorrow, so we'll be live tomorrow with non-farm payrolls, guys. So make sure to attend our show. So okay, let's move on. I mean, we already did gold. We already did the US dollar currency index. The pound. Let's move forward and let's have a look at silver. Very interesting move in silver. I mean, this is a beautiful market that silver is a very nice market. And what do you know? Silver is again pulling back. I'm sorry. Here, silver just pulled back to that big level. The 1858 level, and buyers have been found. Okay, so well, let's get rid of these lines because these lines are just not working for us anymore. And let's have a look at historically if we have an important level at the top around the 1960 on silver. Okay, remember that 1960 on silver. Let's have a look. We have this base right about here. Yes. So this white, I'm going to change it to a red because red are my historic levels. And we're going to go back to the hourly chart. Okay. And let's see. Again, boom. Right there, a historic level was hit. Very interesting price action around this level. And then after the historic level was hit, of course, right here, sellers jumped in, moved price down. And of course, I do think that also buyers took profits at this level, which causes a bearish pressure on that asset. And now silver has jumped, has retraced back to the previously broken level. And buyers have been found, or sellers have just closed the positions. Very interesting price action. If we go to the 50, I normally don't look at the 50-minute chart, but I just wanted you guys to look at it because I wanted to show you that there is still in my eyes, there is still no buy opportunity here in silver. This looks very bearish to me still, and even though we have this long week. On the last 15-minute candle, this new candle is just continuing to drop. So we are going to be staying out of this market unless we do see some reaction here, and we can buy at a previously broken level. That's the only way that I will be a buyer here in this market. But it's still looking good. It's still looking good from a level perspective, but we need that, definitely we need that reaction to this level. Okay, this is too soon. Just wanted to point out the importance of that level and the retracement in silver and what we will be looking at. Remember that if you want my correct and exact trade levels, just subscribe to our premium community. I have left you a 50% discount for your first month. Only $25 to try us out. And the link is below this video. Now, if you also want to get notified every time I go live, just subscribe to this channel and hit the notification bell, and you will be able to join every time I go live, because not every time I send an email, a full email for to invite you guys. So let's move on. Remember, I will be live tomorrow for non-farm payrolls. So don't forget to join. Okay. Now, the U.S. dollar versus the Mexicano, or the peso Mexicano, or the Mexican peso. Yeah, I'm Latino. That's why I say it the way I say it. Very interesting level. I mean, if you remember correctly, I shorted the US dollar versus the Mexican peso here, and but actually I shorted it right here. Okay, but I executed my time stop because it wasn't moving in my direction. And I lost. I mean, I missed on the move, which is completely fine, because the decision to leave that, or yeah, to close that trade at break even, was made based on raw data, because I've done the work. I know that if after 24 hours my trades are moving in my direction, um, well, it's more likely that they're going to hit my stop loss than move in my direction. But I mean, we missed this move, which is fine. But now, very interesting level on the US dollar versus the Mexican peso, and I'm going to thicken this chart out for you guys. And I'm going to go to the hourly, because I do think that we have a much better way to look at price action from the hourly. Now, very interesting. A lot is going on this chart, but I still find it very interesting. Okay. Now, just take a look. These were our ultimate targets to the downside around the 1970 level, which are the previous highs right here, that we already tested as support once, and this is where real buyers jump in the market. You can see it right here. We moved from the 1970 to the 2050 very, very quickly. Now we have broken with this wedge kind of structure. Okay. And also, this is a historic level that I don't know why it's painted in green. Maybe it's not historic, but I'm not going to find out. It's fine. I do trust my lines and my charts. No one touches my charts but me. And right now we have retraced 61.8% from the entire move to the upside, which leads me to believe we are. I mean, even though we have broken with the immediate bullish structure, this doesn't mean that this market is bearish, okay, or our bias has turned bearish on this market. No, this means that we are going to be looking for long opportunities. The reason that we shorted the US dollar versus the Mexican peso is because the US dollar versus the Mexican peso was trading at an extreme level, okay, and we were trying to capitalize on a pullback, okay, and yeah, I don't understand that it's much better to trade impulsive move than it is to trade pullbacks, but that's fine. If and when you look at an asset that's trading at an extreme level, and a deep pullback is is due, like this one, from high to low. This is a 3.10% pullback from high to lows. You should trade it, definitely. The pullbacks that you definitely should not be trading are these pullbacks right here. These choppy pullbacks to the downside or short-term pullbacks are way, way worse to trade. And I would completely tell you that you should not trade. For example, when we broke to the upside, right here, when we broke with the previous highs, okay, right here, and we reached this level where momentum buyers gave up, trading this pullback back to this level is disastrous in my eyes. Why? Because of the risk that you would be taking versus the possible reward. All right, it's barely a 1-to-1. In the other case, trading the upside, right, is the risk versus the reward is much, much better. So again, that's why I don't trade pullbacks. Well, I do trade deep pullbacks, just like the one the US dollar versus the Mexican peso or the peso mexicano just went through. That's completely fine. But now I'm looking at this level, okay? The previously broken level tested as a base and now being retested again, right here between the 1970 and the 1965. Just let me put on the correct coordinates on my lines. 65. That's perfect. The 61%, but if you look closely, I mean, and this is what's important to me, we are at a point of control. This entire thing right here is my volume profile, okay? Now, the volume profile, what the volume profile does is the volume profile calculates the volume of a fixed range. In this case, we are calculating the volume of the entire move to the upside and the pullback, okay? Because this is the range or the fixed range that's interesting to us, okay? Everything to the back, it's not interesting to us because it not pertains to the price action. So, and the point of control, or this thick red line coming out of my volume profile, okay, this one right here, I'm sorry, this thick red line right here, this is the point of control. The point of control is just the exact level where the most volume was traded in this fixed range, okay? And the volume, the point of control is where big orders are going to be placed, okay? And that was one of the reasons that this was our ultimate target. Now, right now, there's definitely no setup to buy the US dollar Mexican peso, but what I'm looking at is a possible breakout of this high. But again, we are at a very interesting spot in this currency pair, and if you want the exact trade levels that I am going to be entering at, just subscribe to the premium community. I'll just for $25 for the first month. I mean, that's less than $1 per day, guys, just to try us out. It's nothing, and again, if you don't like the premium community, you can just cancel your subscription. Now, let's turn up the volume and let's go look at crude oil. Now, big level being broken right here in crude oil. The 56.95 level. If you remember, on the past daily edge, we were looking at this level right here, which is great. Which was a big level of resistance where sellers were jumping in. And not only that, but fundamentally speaking, the past week, fund managers and money managers, they reduced their overall buy position or their overall bullish position in crude oil by around 25 million barrels, turning them net sellers for the week, and that was one of the fundamentals that led us to believe that that right here was a great opportunity to sell crude oil, okay? And it was a great opportunity to sell crude oil because if you look closely, we move all the way down to the previous lows. Okay, and again, this is an important level that I haven't pointed out on my charts yet. But I mean, we really were expecting is for a buy opportunity is to hit the 51 to 51.65 level or these previous lows. But it didn't happen. Buyers jumped in around the 53.30 or the 53.20. No, 25. I'm sorry, guys. 25 level. Between the 53.25 and the 53 level, buyers starting to jump in, and right now, price has moved all the way back to this 56.95 level or previous highs, where sellers are jumping in again and again. But now looks like it's going to break out So what we're going to be doing is basically just waiting for that momentum to dry up and a retest of this level for a continuation higher, which our first target would have to be these previous highs, and our second targets around I'm sorry, let's grab the correct tool, around that 60 to 60.20 level. This is what we're looking at in crude oil. Now we have to look at the entire volume, of course. The point of control is still there, and we are above that point of control. And if you look closely, we are above that big, thick volume. And if we keep moving up, volume just keeps drying out, which means that it's going to be easier for buyers to move. It's easier for buyers to move price up. Okay, now pure mathematics telling that oil is bad trades. I quite don't understand what you're saying, but I think that you are talking about this short opportunity that I was discussing. Yeah, we have. I mean, if the market continues to rally, not rally, but we have a clean breakout retest, we're going to be buyers in oil. The US dollar versus the Japanese yen, yeah, I forgot to talk about this. Nice breakout of that 106.70 level that was capping price down. If you look closely, 106.70 level where sellers jumped in over and over again. Okay, now we have a clean breakout of that level right here, and of course we will be looking for a pullback to jump in long. But because tomorrow is non-farm payrolls, we are going to be very careful with the currencies that we trade. Because let's have a look at the expectations for non-farm payrolls. I do think that we have higher. I mean, the expected numbers are higher than previous numbers. I don't have them with me right now, but in any case, this is what we're going to be looking for in crude oil. In the US dollar, Japanese yen. Okay, for a continuation higher. The US dollar versus the Canadian dollar. I mean, that was very interesting fake out. Okay, I mean, bulls got completely trapped here, but again, this move is just basically a reaction to that big drop in the US dollar or the US dollar index. Okay, but now we have retraced here to this previous base, very important base. We're going to use the correct tool to point it out. I mean, a very, very important level, if you ask me, guys. Let me just get rid of this too. Very important level right here. Very important level as resistance, and very thick price action here, where you can see buyers jumping in all over the place. And this was the place where buyers jumped in. Okay. Again, we are still inside of that range. This is what? 140 pip range. We did miss that move to the upside, and we don't chase the markets, guys. But it was a clear buy setup for a very nice risk reward scenario. Okay, but we are still inside that range. Okay, now possible targets to the upside if we manage to break that 133.37 level is that previous highs right here at around the 134.26. Now, I think we have gone through very fast through everything we wanted to do. But yeah, I mean, this was a very quickly. Well, not that quickly. We've been together now for 40 minutes, and we have gone through everything on the map. So again, I invite you to. Tomorrow's Daily Edge is going to be live during non-farm payrolls. Don't miss out. I'm going to be sending you guys an email. But I mean, if you want to get notified, again, just subscribe to this channel. you're going to get notified. Subscribe to the channel and click on the notification bell to get notified exactly the time that I go live. I'm going to be live about 30 minutes before NFPs, and I hopefully will see you. We'll see you there. Again, thank you for joining us today. The recording is the same link that this video is being played at, or this live session is being played at. So if you weren't here for the entirety of the Daily Edge, I urge you to just wait until the stream has ended and just re-click on this link and go back to the beginning, and you're going to be able to look at everything we have gone through. So until tomorrow, guys, this has been Orlando for Tradimo. I say you happy trading.